in Nigeria combined. The real question is whether this is the true picture. How does this impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who's crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public and that your story is told right every time.
Okay. Okay. Good day, everyone, and good morning to those in Nigeria. Um, we want to welcome you to the January edition of our bi-monthly tax chat here in KPMG. And I mean, we appreciate you that you are joining us today for this insightful session. Our topic for today is navigating compliance with the 2024 withholding tax regulations, what you need to know. All right. So my name is Unubi Abdullahi, and I'm a senior manager with the Tax Regulatory and People Services Division of KPMG West Africa. I will be your moderator today for this session. So I'll start by saying that we're all aware that tax compliance is the cornerstone for any responsible business operation. It helps to ensure that businesses contribute their quota to the development of the economy in which they are operating in, and also comply with their laws. Well, the issue with laws is that there are frequent changes to tax laws, particularly, and which is our topic today, is the updates that have been made to the withholding tax regulations in Nigeria. Businesses will find themselves grappling with new complexities and new challenges because of these updates, right? The 2024 withholding tax regulations have introduced several key updates with the objective of trying to simplify and clarify any confusion in the previous regulations. It has also aimed to align the tax framework in Nigeria with global best practice as well. But as often is the case with regulatory changes, it also raises a number of questions. So questions like, how does this impact my business? What are the complexities of pitfalls that that businesses need to be aware of? how can businesses comply with these compliance obligations without any hitch in their operations? Well, these questions, and of course a lot more, is what we're going to be discussing in today's session, right? Over the next 2 hours, we're going to discuss key aspects of the 2024 withholding tax regulations. We're going to unravel complexities and provide practical guidance to help you navigate this new landscape. Now, whether you're a seasoned tax professional or you're a business just trying to stay ahead of the curve, right? It is our hope that we provide you with valuable insights today, so that you can minimize your risk, and get updates on what the rules are. By the end of this session, right, it is also our hope that you regulations and you're going to walk away with actionable takeaways, which will help you, in your compliance strategy. So I'd say sit back, relax, and get ready for an engaging and insightful session as we go into the 2024 withholding tax regulations. So we have with us today one of our partners in KPMG. And of course, to complete the conversation, we have representatives from our regulators. I'm sure a lot of you are happy to hear that because it will provide a lot of insights, right? And I'm sure you have questions that you want to be answered. Okay? So it is with great pleasure that I introduce to you today our friends from the regulatory authorities who will be acting as panelists in our session today. So please join me in welcoming Mrs. Adesope Sodipo. Mrs. Adesope Sodipo is the acting director in the Oil and Gas Department of the Federal Inland Revenue Service. She's a graduate of Banking and Finance with a first-class honors from Olabisi Onabanjo University, and also had a distinction in her Masters of Science in Accounting from Caleb University. And, this is just one of her many qualifications. Mrs. Sodipo started her career with the FIRS as a young officer in September 1990 and has grown to the ranks of a deputy director. She has extensive tax experience, having served in various roles and capacities over the past 3 decades in her career. She's an integral part of the team that has made remarkable strides in advancing the FIRS goals. We also have another regulator. So her name is Miss Gbemisola Sarat Oduwole. She's the revenue manager in the personal income tax unit of the Lagos Internal Revenue Service, LIRS. Miss Oduwole is a lawyer decorated with memberships across various bodies. She's a member of the Nigerian Bar Association. She's a member of the Chartered Institute of Arbitrators in the UK. And she's also a fellow of the Chartered Institute of Taxation, of course, amongst other qualifications. She's a tax leader with well over 16 years of experience across various facets of tax, including tax compliance and tax audits. She's not just everything we've mentioned. She has also pioneered a lot of projects. Typical examples are, setting up the tax compliance and information business unit at the LIRS. She was also involved in drafting the casino and gaming law in Lagos State, as well as setting up the Association of Casinos and Gaming Machine Operators in Lagos State. Ms. Oduole is currently managing well over 5,000 companies in Lagos State in terms of their withholding tax compliance. Now, on our end, we also have Aminat Jegede, who is a partner in the Energy and Natural Resource Units of the Tax Regulatory and People Services Division of KPMG. Aminat has a master's in petroleum economics and management, and she has over 16 years professional experience leading several clients, covering their tax compliance and, of course, providing tax advisory services to clients in different sectors, including clients in the energy and natural resource industry. She has led several tax disputes with the Federal Inland Revenue and also the State Internal Revenue as well. So this is a list of our panelists today, and hopefully we answer your questions and we give you a very engaging session. So next on our agenda is a poll, right? So we would like to take a poll so that we can just understand your knowledge of the subject, of the topic we're talking about today. All right. So before we take the poll, right, I'd just like to set some ground rules. The first rule is, please, as you log into this session, kindly mute your mic. And in the course of our conversation, where you have questions, please include your questions, in the chat box. We'll try to address them before the end of the session. All right. So we're going to, so on your screen now, you're going to see a QR code. Please take out your cameras and scan the QR code to have access to the poll. In the event where you can't do that, we will post a link in the chat box very shortly. And please use that link to access the poll. So I'll just give you all a few minutes, right, to join the poll, and then we can start taking the poll. All right. Please, we encourage everyone to participate in the poll so that we can get a very representative response of the population. I can see someone asking where's the link. The link will be posted shortly. Okay. Okay, so I think we can go into the poll. Okay, I can see somebody saying there's no poll appearing yet. We're just about to go into the poll. So we'll take the first question of the poll. Okay, so our first question is, do you think the 2024 withholding tax regulation resolves any gray areas in previous regulations? Oh, I can see people are voting already. The 83% or 87% has answered yes. and about 17% are responding to say no. Okay, so I can see the poll slowly taking shape. All right, so I think it's looking like most of us think that the 2024 withholding tax regulations has resolved many of the gray areas. And I'd say I quite agree, right? Because the withholding tax regulations have existed for a very long time. So it only makes sense that, with this recent introduction of the withholding tax, or the recent updates rather of the withholding tax regulation, a lot of gray areas would be resolved. Well, so let me ask one of our panelists, Mrs. Shodipo. All right. Do you really think the updates to the withholding tax regulation has resolved some of the gray areas in the previous withholding tax regulations?
Yeah, good morning, everyone. And I welcome everyone to this study program. Yes, I want to say the 2024 regulations is addressing most of the gray areas that's come. Of course, this is not the first time, it's just an upliftment of what has been done in the past. It has been issued and it's not, I cannot say I'm going to do 100% assessment. I believe the taxpayers, they've gone through it and they've made up their mind. And that's why you saw the polls that said, you saw the rate of the voting, 84% said yes, it has. Because if you are taking pain to read through the regulation, you see that it has addressed some gray areas that we have been looking on in the past. That's what I can say for me. Thank you.
Thank you. Thank you very much, Mrs. Shodipo. I think the poll and our audience agrees with you. So let's take the next question of the poll. We'll take a second question. So our second question says, do you think the 2024 withholding tax regulation has increased the burden of WHT compliance on taxpayers? Okay, so this will be very interesting to see. Oh, okay. Okay, at some point we got a 50-50 response. Some people said yes, while some others said no. People are still voting. And it's interesting, I thought I was going to get a clear winner, right, on whether the burden of WHT compliance on taxpayers has increased. But it appears a lot of people or the votes is showing, at some point a tie, right? But now we have, a slight majority saying, yes, it does increase. And this is good to know, all right? This is good to know that the regulations have not significantly increased the burden, on taxpayers. Aminat, if we can hear your thoughts. So do you think?
Good morning, everyone, and thank you, Unubi, for that question. I mean, it's interesting to see that majority of our participants are of the view that it has increased the burden of withholding tax compliance. Now, if you look at it, I can agree with them, and I'll tell you why. When you consider the fact that prior to now, what we basically had was, will I say, between a 2 to 3 rates of withholding tax. And when I say 2 to 3 rates, we were looking at either a 5%, a 7.5%, or a 10%. So there was some sort of clear guidance as to what needs to happen. Now, taxpayers will need to up or even upgrade their systems to account for the different withholding tax rates, depending on who you're transacting with or who the beneficiary of the transaction is. I want to believe that this is one of the reasons why they are of the view that the compliance rate is going to increase. That's number one. The other thing that comes to mind is also a very interesting one, which is the requirement to issue receipts to beneficiaries. Now, interestingly, I'm not sure a lot of people are aware, but that provision has actually always been in the law. If you look at the erstwhile withholding tax regulations 1997 that came into effect in 1995, you actually note that it required any taxpayer that was deducting taxes from, from their suppliers to issue a receipt. So when you talk to people and you ask them, what do you think of the new withholding tax regulations? Those are some of the things that they are talking about as to some additional administrative requirement. But I mean, as we continue to discuss, there are some other benefits that, like Mrs. Shodipo had mentioned, that the withholding tax regulation brings to fore for businesses. And I believe we'll delve into that very soon. Thank you, Nubi.
Oh, thank you very much, Aminat. And I like the fact that you pointed that the provision, right, for issuing withholding tax receipt has always existed. I think our audience is critical information. I think our audience need to be aware of. So we're going to take the third poll. Okay. So the third question on our poll says, what kind of impact do you think the new withholding tax regulation will have on remittance of withholding tax to the appropriate tax authorities? I mean, the expectation is that this would improve compliance, right? Because, a lot of issues have been simplified. There's more clarity now. And it is expected that it would improve compliance across board. And it would also improve, government revenue. Yeah, we can see that most people think it would impact, the withholding tax regulations will impact remittance to the tax authorities positively. At the moment, we have 83%, about 17% are neutral. And so far, nobody thinks it would have a negative impact. All right, so I think at this point, I'll ask Ms. Oduole to just share her thoughts. What do you think about this poll, Ms. Oduole?
Thank you for the invite. For me, I would go with the audience. It would have a positive impact, though the whole idea of the new regulation is to right what would I put it now? The wrong in the previous regulation, the 1997 regulation, and make at least we have seen the government has seen some errors in it, which this new regulation is trying to address at this point. So it's going to have impact. And again, the issue of the small businesses that have been exempted from deduction of withholding taxes. Some have said that is a plus for small businesses. But for us, before now, the 1997 regulation talks about people that are to deduct withholding tax and those that are operating payee. Now we have the law, this new law, the 2024 law, has now extended it to others, irrespective of whether you are operating the pay-as-you-earn system or not. So it's a plus and it's a positive impact for compliance. Thank you.
All right, thank you very, very much, Ms. Oduole. I see the audience also agrees with you. Okay, So let's take our fourth question. So the next question is, did you commence compliance with the 2024 withholding tax regulation between 1st July 2024 and 31st December 2024? I think for me, I really wanted to see the response to this, right? We have most people saying no at the moment. We have about 64% of our attendees saying no. At the moment, we have 35% saying yes. And for me, I think this is, 33% at the moment. So I think this 33% is a significant number, considering that the earlier, in 2024, the withholding tax regulation was released with a commencement date of 1st of July 2024. And you expect that, some businesses will commence compliance, right? So it's interesting to see that, we have 65% saying that no, they did not commence, while about 35% are saying yes. So let me just get the view of one of our panelists. At the moment, I'll call on Aminat, right? I think this is a very interesting poll.
Thank you, Unubi. I mean, I was quite surprised that a number of our participants actually did not start the implementation in July. And the reason why I'm saying that is because if you look at the Companies Income Tax Act, there is a provision that requires the Minister of Finance to issue regulations relating to the deduction of tax at source, but it's also good to see that taxpayers are mindful of the tax appeal or tax regulation and update system, because as we are all aware, the expectation is that for any regulation to come to fore, then such regulation should have been gazetted by the National Assembly. But I will really be interested in knowing what Mrs. Shodipo has to say about the 33% of participants who have commenced the application, because there is some provision even in the Gazette regulation that gives a room for the 33% of our taxpayers who have commenced the implementation of the act in July 2024. It would be nice to hear how the FIRS intends to tackle that. Mrs. Shodipo, over to you, please.
Thank you very much. And I mean, I know you come back to me on this, and really when the regulations came out, and we saw that the lacuna that some people can actually take the early adoption. If you see FIRS swiftly issue a public notice, telling that the adoption is to start from January 2025. So, and it was not actually gazetted. And we know, and I don't know what the tax practitioners there, I'm a consultant, how they educated their clients about when a law of a regulation came out and it has not been gazetted, is not applicable. So for few taxpayers that link up with us to our view, we told them until Gazette, came out, they cannot adopt it. Even if unfortunately, when it was gazetted, it was clearly stated it's going to start from January 2025. For where you are under remitted, because we issue public notice immediately. So because the brain behind it is that we know that for the big companies, it's not, they have configured their system from January of every year. It might not be easy for them to go and start adjusting in between the year. So we're actually considering the ease of compliance for our taxpayers. we didn't meant to punish them. That was okay. By the time you finish in a year, you'll have configured your system for your computer system for another year. It's meant to make life easy for the taxpayers, not to actually punish them. That's why we said, okay, the public notice said starts on January. So there will not be issue that I cannot interrupt my system that I've configured early in the year. That's the intention, to make life easy for the taxpayers. But we don't know those that strictly, started changing. We don't know, maybe they have the system or they have the premonition that is coming out, and they said they started adopting. We didn't know the miracle that happened. But if it's other way around, they'll tell us that their system is still, they cannot interrupt. So that's the FRS wanted to make life easy. We usually publish statement and to just make life easy. So that's what I can say. So we told them, those that have come to us, and we in the field, we were getting in touch with our tax policy that they have to follow up with the Minister of Finance to actually gazette the regulation which they did. The intention is to serve and make life easy for the taxpayers. Thank you.
All right, thank you very much, Ma. And I mean, I hear you and I understand your position on this matter, but just thinking about your response, I was just wondering, if one looks at the withholding tax regulation 1997, it actually had a commencement date of 1st January 1995, and if one follows that trend, right? If you juxtapose it with this new one that was issued in July 2024, don't you think on the surface, taxpayers may also have been expecting that when the Gazette would be issued, it would be issued with a 1st July 2024 commencement? But that's on the one hand. On the other hand, in this particular Gazette or in this particular regulation, there is a provision that kind of gives a leeway for taxpayers to early or to, adopt that 1st July 2024 as their commencement date. So how would that issue be addressed, especially as this is something that is provided for inside the existing regulation? So the point I'm trying to make is those who may have adopted kind of have a legal backing for the early adoption, and the regulation has also said FIRS and other tax administrators should come out with some sort of modalities on how these early adopters would be sorted. So what should we be expecting from the FIRS in that regard?
Yeah, thank you. I mean, I mentioned it. When we saw the gazetted now, we saw that there are actually two leeways that to choose the early adoption from July or wait till January. That's why FIRS quickly issue a public notice that you have to wait till January 1st, 2025. That was just to suppress anything. And the circular, the regulation even stated that liaise with FIRS before you want to even do early adoption. We were surprised that a few companies did not even come to us. We just heard that we have said, even the big companies that we didn't even expect. They said, liaise with FIRS if you want to do early adoption. They did not come to us, they started. If they have waited for the process to adopt, to liaise FIRS, maybe they will have seen that circular. We are not really, accepting the July in 2024, but rather, because even in our own house, there are some things we need to do to be able to, adopt that thing. There are still administrative things we need to do internally. So the circular has come out, I mean, the public notice has come out stating the FIRS position clearly, and we expect the taxpayers to comply with it. Thank you. So, and I mentioned before that peradventure, any taxpayers have gone to do earlier. Since we did not agree with that one, they just have to make up and do the needful. If they are under-remitted their taxes, they need to do so that the penalty and interest will not be counted on what they have done. Thank you very much.
Over to you, Nubi.
Okay. Yeah, thank you very much, Mrs. Shodipo. I'm sure a lot of our audience would want to hear that, right? Or want to know what to do in the event where they adopted early. So we should go to the last poll question. We'll take the last poll question now. Okay, so the last poll question says, do you agree that the applicable rates established by the 2024 withholding tax regulation is fair? So far, we see 100% of the audience agreeing. Okay. Nobody disagrees. So, I mean, this is very, very impressive, to see that everybody actually thinks that the current withholding tax rates is fair, right? I know that in the past, this was, it created a lot of debate, while some sectors were, didn't have issues with the rates that were applied on their transactions, others were, right? So it's good to see that everybody in this poll thinks that the withholding tax rates are fair. Okay, so I think that brings us to the end of the poll questions. We'll now delve into, just general questions or issues that surround the withholding tax regulation. I think my first question would go to Aminat. All right. So, Aminat, I think a lot of people in the audience, right, may not have read the withholding tax regulations. All right. So, it would help if, maybe we can just maybe summarize some of the practical issues that you have encountered with the implementation of withholding tax in prior years. And do you think that the new withholding tax regulation has addressed them?
Okay. Thank you very much, Unubi. And I'm glad that you brought that up because, like I mentioned earlier, the expectation is that during the course of this conversation, we also see some of the benefits that the withholding tax regulation has brought to fore. When I look at the practical issues that were existing prior to withholding tax regulations 2024, there are quite a number of them, but I would like to focus on just 3 of them, which I want to believe it's a huge relief for taxpayers. The first one is with regards to the claim of withholding tax credits when a customer has deducted but did not remit. If you remember prior to now, and if I sit in and look back at some of the audits that I've been involved in, when a client or a customer has suffered withholding tax deduction and there's been no remittance to the FIRS or even the LIRS, then that taxpayer is saddled with the responsibility of following up with the customer to ensure that the money is remitted to the FIRS. But now we have a regulation that is saying all you need to do is issue me a receipt that demonstrates that my income has suffered withholding tax deduction, and that receipt should be honored by the tax authority. I think that's a huge relief for most taxpayers. And of course, I would really like to hear what the tax authorities, and I'm talking about Mrs. Shodipo and Mr. Adbosede, to see how the tax authority would, give effect to some of these credits when they are presented, and to just dive into some of the practical issues that this may bring forward. The other bit is the instance of when a company inadvertently does not deduct withholding tax from its suppliers, pays over 100% invoice value, and there's been no withholding tax deduction. In the event that such companies were audited, there have been instances where the FIRS or even the LIRS required such companies to make good of such amounts, right? Prior to now, our own position has been, once an income did not suffer withholding tax, yes, there is that responsibility that has been given to a taxpayer to deduct. But if the taxpayer did not deduct, then it's only an administrative penalty, because that role of the agents of the federal government in terms of deducting was not fulfilled. So hearing and seeing that the withholding tax regulation has now made that clear, cast in stone, that once you do not deduct, it's only an administrative penalty that would be payable. I think that's also some sort of relief. The last one I would like to also talk about is with regards to the clarification of the term when a payment is paid or credited. You know, there's always been all sorts of, will I say, interpretation as to, okay, do you mean when I actually pay my client, or when I pay my supplier, or when I credit their account in my books? You know, and of course, the other bit is, I guess the gray area was more for intercompany transactions, wherein the transaction is between related parties and you're just accumulating a lot of payables. We've had instances where during audits, there's been that issue of, does this mean I have to wait? And I'm saying the tax authority would demand that, does this mean I have to wait until when this liability is resolved, or when this liability is paid, before the withholding tax would be remitted? So I think to some extent, those three issues, I want to believe they are some sort of relief, and there's clarity now on what would happen when those situations occur. For me, like I said, it would be nice to hear the issue around how effect will be given to those credits, and I would like to hear the thoughts of Mrs. Shodipo and Mrs. Osiobe, as in, okay, so what, Mrs. Oduwole, what happens now when customers or taxpayers present evidence that they've suffered withholding tax deduction, and perhaps the deductee has not remitted to the FRS? I'm just really looking forward to the answer to that question, because proud to now, what we've had was instances where the taxpayer needed to bring evidence that that amount, even when the taxpayer presents evidence to the tax authority that their income has suffered withholding tax deduction, they also needed to bring evidence that that amount has been remitted. So it will be good to see how we're going to manage this now that the law requires the tax authority to give effect to that receipt that would be presented. Thank you. Mrs. Shodipo, over to you, please.
Okay, and thank you very much. You have said it all. You know, what give us joy in FRS with the regulation is that, you know, we have headaches. You know, we have headaches. All these your credit. We are still battling even with the backlog. So, but with this one, how we want to adopt it is that receipt that you counted as a burden the other time, usually the joker. If you have suffered withholding tax as source and you were able to bring, but that receipt must be issued. There's the format. Make sure they follow the format of the receipt to be issued wherever. When you bring to us, and our system is being configured to recognize those receipts. So we won't say go and pursue the person that deducted your money, that you want to see that they have not remitted. What we want to do in FR is that you will collect the receipt, because the person that issue receipt is like he has given an open check. We have to follow up with the bank, with his bank or a bank. It's like a promissory note that he has issued. That is how FRA wants to adopt it. We'll go and collect the money. So they won't tell you to go and pursue or go and bring evidence of payments. That is the system that FRS is ready. So, and you get your credit immediately, because you actually want to stop the issue of compounding all these credits. So some companies, they have to write off even the credit that's not coming. The credit that's not coming, they have to write off, and that will even cause problem for us. But that is where, so just make sure the receipt is issued properly. Don't be in a hurry to leave the person that issued receipt. No, take all items that are supposed to be there, the TIN, everything, the name of the company. You just bring to us, Mrs. Jagade, 1 million. I bring the receipt. So you take your credit. FRS will pursue the person. We are not going to it's just to the bank. This person has issued an open check. Help us to deduct the money. Of course, it's going to aid your cover. Even it's going to reduce friction. All the fights with normally fights when we are doing audit, that whatever I'll suffer. It's going to reduce it, because I don't need to say to go and bring evidence. So, and like maybe the third question that time that they said, will it the positive impact on the revenue authority? It will have positive impact. Even the fear that if I deduct money and I don't remit, they will deduct it from my account, will make the person that deducts to remit as and when due. Nobody will keep government money. The money will keep on coming to government purse for national development. That's just the intention. So our system is being configured to give credit to the taxpayer when you come with the receipts that are properly issued to the person that does the money. Thank you very much.
Thank you very much,
So
Mrs.
the issue of
Shodipo.
the payment, what's the other thing? The administrative penalty. Yes, for those that's supposed to deduct and I mean, I have to tell you, even if you look at the administrative penalty, it's even more than the actual tax itself. So it's not as if somebody can run somewhere, because if you fail to deduct what you are paying, the penalty, if you look at the rate, is on a base. It's 150% or 200% or whatever. So please let us guide our clients very well, so that they should know what is the cost of compliance, what is the cost of not complying. These are the things we put together. So do you want to pay absolute penalty? That is even based. Well, we have to compute what is the liability. Okay, you're supposed to deduct 100 million, you didn't deduct. The penalty is 150% of what is not deduct. Will that pay the taxpayers? So it's better to comply and don't try to circumvent the law. Do the needful so that the law will not catch up with you. That's the other thing. So penalty is not 10%. No, look at it very well. It's even more than the liability itself. So it's better to comply with the law. So that is it. Of course, you said the one when it is paid or credited. Read it very well. It's still there. It is when the liability is, I mean, the payment crystallized or when it is recognized. So let us do. And when you pack or you accrue, well, it's always causing issue. And I don't think that one has been taken off completely. So we need to sit down at the table and be able to understand what the law is saying on that. It's still saying when the credit is recognized or when it is paid. Thank you very much.
Thank you very much, Mrs. Shodipo. I'm sure our audience really wanted to hear that, because this would really assist them in their compliance going forward. Okay, so I think something I just want to add very quickly, and I can see a comment in the chat box to that effect. I can see someone said, I need clarification on the new exemption to withholding tax. Also, does this new legislation only relate to withholding tax alone, right? So I just wanted to say very quickly that in the past, right, there was a lot of debates on the meaning of sale in the ordinary course of business, all right? But what this new withholding tax regulation has done is make the withholding tax exemptions a whole lot clearer, all right? So you see, exemptions like across the counter transactions, making out of pocket expenditure, all right? Insurance premiums and the likes, right? So I think that clarity in the withholding tax exemptions is very important. And yes, the exemptions are in the withholding tax regulation and they apply to withholding tax alone. All right. So I would like to ask Mrs. Shodipo, all right, that in the past, the FIRS has released a lot of circulars. The essence of the circulars is to provide guidance on the implementation of withholding taxes. So with the release or with the updates of the withholding tax regulations in 2024, right, are the old circulars still valid, or does the regulations, the updates made to the regulations, do they override the circulars?
Yeah, and thank you very much, Inubi. Of course, you can see the new regulation is now has superseded the earlier ones. Of course, you cannot say you want to remit VAT where the rate has become 2%, you want to go and adopt 5%. So when a new one comes out, it overrides the earlier one. They are not to run concurrently. Are you getting me? Am I communicating? So if they are reduced your utility rate to 2%, you want to go and use 97 regulation and rev it at 5%. So this one, this is the current one, and it has come to say we'll go by what all those things that are stated in the 2024 regulation. That's the other thing. Thank you.
All right. Thank you very much. I can see Aminat has her hands up. Please, Aminat.
Thank you, Unubi. I just wanted to react to some of the responses from Mrs. Shodipo, and also to remind you that we also needed Ms. Oduwole's comments on, my initial reaction, so that we can get the perspective from both the Federal Inland Revenue Service and, of course, the State Inland Revenue Service. My first comment was with regards to the clarification on the amount being credited, or the amount being paid or credited. Mrs. Shodipo, of course, I'm aware that that provision is still in the withholding tax regulation. The analogy I was trying to paint was that there is some sort of clarification now for what happens with related complaints, right, or related parties when there is that unpaid amount that is just being lumped into a particular account. So it's good to know that at least our taxpayers now have some guidance as to how that will be treated, rather than these issues being brought up during audit exercises and the tax authority insisting that even though those amounts are yet to be settled, that the taxes on them have become due. Now, the other comment I would like to make is with regards to the administrative penalty. You mentioned that is 150%. And I was wondering, I thought the administrative penalty is being derived from the Federal Inland Revenue Service Act, the one that talks about 10% penalty, because Mrs. Shodipo, 150%.
Okay, yes, you look at it very well. If you look at the FRS Act very well. So
The Establishment Act.
Establishment Act. So you look at it, failure to deduct, you will see the penalty is the tax not deducted plus penalty plus whatever. So we need, it's a pity I don't have the whatever here.
That's
so,
what we used to have.
So that is the penalty. So it's not the flat 10%. They tell you the amount due plus 10% plus interest with the with the CBN rate and the MPR and the spread. So let us be guided, and that's why it's better to prevention rather than cure. Don't let us even get to where we are going to pay the penalty.
Yeah, I think I totally align with that. Yes, that's
yes.
I guess the messaging is that do the right thing the first time, so that we do not even get to a situation where we're talking about whether or not there's a penalty.
Please, let the taxpayers, let them know all this, please, so that they won't even run foul of the law. It's not, if it's 10%, that means when people, they will be ready. I mean, if you're supposed to pay 1 billion, you can choose to stay back and say, let me pay the 10%. So it's not that 10% straight. So it's not that 10%, it's the amount you refuse to deduct plus penalty plus interest. The interest is not the straightforward with the CBN and the CBN MRR rate. So it's higher than what you, so it's better to do the what's supposed to do within the ambit of the law. That's what I'm just trying to stress here. So it's not the 10% flat. That's what I'm trying to address. Thank you.
Fair point. Okay. Ms. Oduwole, please, can you share your thoughts on the issues at hand, relating to the deductions and claim of credits, especially from the LIRS's perspective?
Thank you very much. I will first address the issue of the receipts to be issued by the payer, the payer of the for the contract. So for us who would abide by the law had said you can issue receipts, and the taxpayers can present a receipt at our office and get credit for it. But I must warn that whoever that issued a receipt that is not you issue the receipt that does not have value, because if you issue a receipt and you have not remitted the money to us at the LIRS, it's a fraudulent activity, and we will not hesitate to use the full word of the law on that. But as a taxpayer too, as a person that is suffering the deduction, you too owe it a duty to ensure that this money is remitted to the LIRS, and ensure that from our past experience, from the past experiences we had, a lot of taxpayers deduct this money, they don't remit, and in fact, the beneficiaries have suffered these taxes, and if we don't see the money, we don't recognize it. But the law has asked us to recognize. So we would be recognizing it in accordance with the law. But the company that has deducted and has not remitted would have, I would say it's a fraudulent act, because you have issued a valueless paper. And it must be, like Mrs. Shodipo said, whatever you are giving to the taxpayer as an evidence of payment of for evidence of deduction should be in compliance with what the third schedule of the regulation has said. It has, because if we see it, that said the receipt number, from the receipt number, it's easy for us at the LIS to trace that payment. So it should be in accordance with that. And again, the issue of the penalty for not deducting, it will still be the amount not deducted plus 10% and interest at the prevailing bank rate. That is how it's still at the same rate as it is today. So it's better to comply than to not to comply. Thank you.
All right. Thank you very much, Mrs. Shodipo, and thank you very much, Mrs. Oduali. Aminat, those were very key questions, and it was important that we heard from them. So we are on the halfway mark, right? We've spent about an hour. So we will just take a quick 3 minutes break. So you can use the time to stretch, maybe grab a bottle of water and drink, or just ponder what we've discussed so far. When we come back, we will continue the conversations, and of course we can see the questions in the chat box. We'll also take some of them. All right, so see you after the break. Thank you.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communication companies in Nigeria, and they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a wildly circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public, and that your story is told right every time.
Okay, welcome everyone from the break. I hope you are all feeling refreshed and ready to join in the conversation. Please recall that when you join, you mute your mics, and then please post your questions in the chat box. We are paying attention to the questions in the chat box, and very shortly we'll be taking a few of the questions. All right, so moving on to the crux of the matter, I'm sure a lot of people want to hear from the regulators. All right, so we will move on to asking the regulators, some of the questions that we think are very pressing. All right. Okay. So my question is directed to Miss Oduwole. All right. The question is, the new WHT regulations does not include, as part of the persons obligated to deduct at source, it doesn't include individuals. Do you think this will have any impact on the deduction of withholding taxes, from eligible payments that will be made by these individuals? So if you can please let us have your thoughts, Ms. Oduwole.
Hi, Unubi. It seems she's dropped off.
Okay. I think
Yeah.
I just noticed that. Okay. So so I'll ask Miss Shodipo a question around we've already discussed the impacts on the compliance level going forward. We could see from the pool that it would increase compliance significantly. So let's ask, right? Be sure that depending when Miss Oduwole joins, right? What mechanisms has the FIRS and of course the LIRS, what mechanisms have you put in place, right, in light of the new process for claiming withholding tax credits, given that taxpayers are now expected to present receipts, so that you can ensure the integrity of the process and validate claims by taxpayers?
Okay, and thank you very much. It's just a simple thing. Like if a company ABC is coming to my office, is my taxpayer, is coming to my office telling me that company XYZ has deducted money from at source with the receipt. Of course, we can't just say take the credit. There are small checks we need to do to confirm from the other end. Of course, phone calls is there, everything is there, that your receipt is there, and we observe that that money has not been remitted. Of course, if you deduct and you remit, you will see as the person is coming, the first thing is to check the person that has remitted the money. You have to check that one first. It only becomes an issue where the money has been deducted but has not been remitted. Am I communicating? So if Mr. A deducts your money, 15 naira, and it's your credits, you come to FRA, they open your system. In fact, the credit will be there because it's instant credit to you. But we want to go and this issue of backlogging the thing as the person is hitting your portal. So the credit is there already. You don't even need to come forward as you want to bring any receipt. It's only when you don't see your credit and you want to claim it, you now come to FRS with the proof. Oh, wow. Madam, I'm not taking 100 naira from me. It's not in my, to do my tax. It is then you come forward, we now collect the receipt from you. Of course, you have the details. That's why you have to follow the receipt the person gives to you. The phone number, even the where the person's account, the file is domiciled. If it's not in my own, you are not the same taxpayer in the same tax office. So we have to validate and confirm that, because the LRS mentioned that some receipts can be fraudulent. We don't just collect from you and say now you have a credit, we give you credits. We still need to do a little due diligence to confirm. Okay, if it is confirmed that you have not remitted, we are giving credits. That's the open check. Of course, she mentioned that they go after them. It's only when you don't have money in their account that they don't run after you. You just take it to your bank because you have issued a promissory note, an open check. They'll debit your account. No need to. It's only when you have opened a dot check, so to say, if that receipt, you issue the receipt and there's no money in your account, that you can go that you are fraudulent. So these are the things that we did, because we don't want the person that suffered the money as source to still be suffering even after we're supposed to get the credits. We'll check it and we'll make sure we pursue. In the past, I'm not gonna be, I said, tell the person to show me that they are remitted the money. So that will not happen. And she has always directed, go and pursue that person. They're taking my money. Now, I think what she said, I'll be put in regulation. So I will go there and pursue the person that has deducted, that has failed to deduct, provided there's no money in your account. So I told you, our system is being configured. It's going to be easy. Of course, if it's a corporate to corporate, it will be in the tax net. And one has to be very careful. If somebody is taking your money, make sure the person has a TIN there, so that it's very easy to track the person that has deducted the money. That's the mechanism. Yeah. In fact, I can't wait to see it being operational. But we are going to the body of looking for credits is we are waiting to see. Thank you very much.
Yeah.
Thank you very much.
Thank you. Thank you, Mrs. Shodipo. And of course, some of the things you've said is music to my ears. But to be honest, I am an Oliver Twist, right? And I'm just wondering, we still have some backlog. And I know that you mentioned it. Backlog in the sense that there are still companies who have evidence of deduction, right? And they are yet to retrieve or receive credits for those deductions. While I totally concede that typically tax laws and regulations do not have retrospective effects, but I'm just wondering, now that we have a system in place that says that on a going forward basis, when I present a receipt to you to demonstrate that I have suffered that deduction, you should give me credit. Is there any way to kind of align with what has been done for the past also? Because we still have a lot of taxpayers who have evidence of deductions but are yet to be given credit for those deductions. Is there a way to use this as a means of resolving the backlog of issues that are currently facing some companies?
Yeah, thank you very much. Of course, we know that it's going forward. We want to solve that problem. That will say we are going to accept the receipts. We won't say go and follow. But the backlog we are doing, because of this, of course, the fraudulent activities. And if you remember, when we are deploying our tax programs, all taxpayers were called to bring all your credits that you have so that we could reconcile. I don't know, some people, they sat back. They didn't come. By now, we will have brought all those credits into the system. When you get it, we just need to confirm. We can't just give credit like that. This is money we are talking about, and that's why it's like we are not moving at the very space. It's like we are moving at the slow space. We still need to confirm from them. Of course, if it's the big companies, you don't have issue with them because their remittance schedule, their remittance is second to none. We have the documentary evidence of remittance. We'll go there, confirm from the schedule they are brought to FIRS to give you your credit. And the only difficulty, somebody said the dollar. Of course, the dollar, you know what people can do. You trust Nigerians now. So we need to be very careful of when we want to give credit. So we need to get in touch with them that they actually remitted. That's where is the process. And you can see throughout the federation to be able to now consolidate and confirm from those that started the big companies I'm talking oil and gas companies now, to confirm from there. We need to confirm. And if you want to be fair to us, for those that have come forward, and they have brought all those things. We're actually trying to do, but at times they will say when if there's technical glitch, for the network, the thing will just stuck in between, and that one is causing the delay. If there's no network issue, you can confirm the credit immediately. So, and that is the thing. And because of course the oil company normally liaise with, before they get back to us, when you submit, we need to get back to it. They also have schedule of duties. It's not as if they will interface us immediately. So somebody's there in payables that want to give us figure until they get back to us. That way we can start working on it. We don't work in silos. We need other, we partner with other stakeholders. Okay, let's say a total, that's my money. Okay, total, please, can you confirm that you actually deducted? Give us your schedule. But in the process of waiting for them to confirm, it's not only one taxpayer we are attending to. We have several requests at the same time. Of course, that's what normally causes delay. But I assure you that we are working on it. FRS is working to make sure that all these backlog are cleared. I don't think we have that issue with Naira if with Naira, whatever, it will hit your portal immediately.
Yeah, spot on. Yes, it's mostly for foreign currency transactions.
Yes, but it is foreign currency that is giving, because somebody raised it now, that is giving us the headache. We don't like it too. We don't want to destroy the operation. We don't want to, our taxpayers, you are king. We cherish the taxpayers too. But because we want to forestall the thing, that is why the thing, the delay. And I'm happy to tell you that even our dollar payment, we want to domicile. We have deployed another payment we call Montify for our big taxpayer that remit in foreign currency. If they file through our Montify, the credits go to the taxpayers immediately. So if we are appealing with them, we have done a lot of sensitization with them to buy into that our Montify platform, that we get the money immediately and the credits go to where they are deducted. You don't wait for JP Morgan to bring this one to go to CBN in Abuja, collect bank statements, start reconciling. So that is want to satisfy the taxpayer. So if our Montify is 100% fully adopted by our taxpayers especially in the upstream industry, you will see that there will be we'll be dealing only with the backlog. The current one, there will be no issue. That's one I can say from the FRS point of view. Thank you very much.
Thank you very much, Mrs. Shodipo.
Yes.
Now, with respect to the platform you just spoke about, Montify. All right, a very quick question. There's still legacy issues with the backlog from non-issuance of credit notes for foreign currency denominated credit notes, right? Is this being considered in setting up the Montify platform?
Yeah, I told you, is the Montify, like that Montify now is not for the back activity, it's the future. Why we don't want to be compounding. We don't want anything to add more to our pain that already we're trying to clear the backlog. Why it will not be recurring? That's what the Montify has come. So if you remit in dollar, I don't have to be liaising with JP Morgan Chase in the United States of America to give me statement. So going forward, there will be no, I think your figure will not be increasing. The one you have done in the past, we are trying to clear the backlog as fast as possible. And our revenue accounting department are working, from pillar to post to make sure that all these things are clear. So far, you come forward. As I speak, some taxpayers will not even come until they want tax clearance. They now say, I have these credit notes. So if they can come at once and they give us the credit that they have, so we'll be able to process them. So it might take a little because there are many, and everybody wants, my own is urgent. If I'm not, it's urgent. Apply is urgent. Madam Gessola is urgent. How many urgencies do you want to deal with? So we have to take one after the other, because of course it's money. We have to be very careful because some have fraudulent whatever. So we need to confirm that what we are given is what whatever. So that's the thing. Thank you very much.
All right, thank you very much, Mrs. Shodipo. Sorry, Mrs. Oduwole, we had asked Mrs. Shodipo what mechanisms the FRS had put in place in light of the new provisions of the withholding tax regulation to ensure that the process and claims made by taxpayers, right, is seamless. Do you have any comments in that regard on what the LIRS is doing.
Thank you very much. For us at the LIRS, if you look at the regulation, nothing, it doesn't really, the rates at which we deduct, most of them are still the way it is, except for a few, the contract and the rest. And then we have the introduction of the new gaming winning on gaming, which is new. For that, the LIRS is in the process of putting a mechanism in place for collection. We have received representations from the Association of Bookmakers telling us their fears and all. So it has been handled internally, and at the right time, LIRS will come up with a position. For the rest, I don't think we have issues of backlog, especially the dollar transaction. It hits the account immediately once it is paid. Once it is recognized, the taxpayer get credit for it. And the only one we are looking at now is the reduction for the 2%. And that will be implemented. Like I said, it's the new year and the implementation date is the 1st of January. So all these issues will be coming up at the end of the month after the deduction has been done. But before then, our software would be in place then to at least to recognize the 2%. But for every other thing, it's still 5%, and we don't really have much to do. Thank you.
Okay. Thank you very much. So let me check the chat box to see if there are questions that we can just quickly address.
While you're checking the chat box, Unubi, I was just wondering, Mr. Duole, for directors, it looks like there's going to be some very big change in terms of the rate ranging from 15% to 20%. It would be nice for some of our taxpayers and participants to even get some guidance. So for these directors, when it comes to issuance of tax clearance certificates for them, what do they need to present to the LIRS to ensure that these TCCs are issued as and when due? Is it the directors that will present the evidence of deduction, or can the company still do that on behalf of their directors?
For both, I think the company should still present the schedule. They still have to present the schedule. And I know the LIRS is the e-tax now. You can file from the e-tax. You don't even need to come to our office. You can file everything you need from the e-tax. So the director, which I think I omitted, that is 15% for Nigerian and 20% for non-Nigerian. So it's increased, so that's from 10% to 15%. Like I said, by the end of the month, we are still in the, yes, it's almost the end of the month. Our portals will be affected, will be in effect to recognize the 15%. But for now, everything is okay. We just let everybody pay and issue the receipt as the law has directed them to do. And when we get the money and you are filed on the e-tax, it will be affected immediately on the taxpayer's account. We have, I think we do that immediately now. Credit note account, the credit are given immediately now. We don't need to, except in cases where you have not filed on the e-tax, because we still have people bringing their hard copies, but we encourage everybody to go on the e-tax, which is easier for us. Thank you.
All right, thank you very much. So I found the question here. It says, does this regulation affect 2025 activities going forward, or will it also affect prior activities happening in 2025? I think I'll ask this question to Aminat. So I think this individual wants to know, whether its payments that are made in 2025
Exactly.
that will be affected. Yes.
Exactly. And I think that also kind of goes back to the discussion we were having when we're talking about when a payment is made versus when it's credited, right? Mrs. Shodipo is already laughing. So, I mean, for all intents and purposes, the commencement date of the regulation is the 1st of January 2025. So what that means is that invoices that are settled from 1st January 2025, regardless of when they were issued, would be affected by that withholding tax regulation, because we're looking at the payment date or when the amounts were otherwise credited. What that means is that as whenever you're settling the invoice, then you need to conform with the new withholding tax rate as indicated in the act. And the same goes for intercompany transactions between related parties. So yes, prior year transactions that have just been settled this year would also be affected by the new withholding tax regulation. Thank you.
No, that's spot on, Aminat. Thank you very much. Another question direct to Ms. Oduwole from the audience is, please, how do we get the receipt? I mean the receipt to issue FIRS when your income suffered WHT but yet to be remitted. So, Ms. Oduwole, if you can assist to answer this question.
Like we said, the law is very clear. Once the taxpayer issue a receipt to you, it takes effect. We will recognize it as a payment and we follow up with the taxpayer to get it. So for I don't know the other side of the question, talking about FIRS recognizing it. I don't know. I don't understand. Because maybe you should expatiate on that. Because what comes to FIRS is withholding tax for individuals, and what goes to the FIRS is for companies. So I don't understand how those two withholding tax meet at this point.
Okay, so this question is with respect to, because the withholding tax regulation requires taxpayers who are claiming withholding tax credits to present receipts from their customers, right? When those customers deduct withholding tax, right? So assuming this taxpayer is an individual, for example, right? And suffers a deduction from a customer as well, who maybe is a sole proprietor or a partnership, right? This person wants to know where to get the receipts. Well, for me, right, I think the simple answer will be to, reach out to the customers, right, who are the ones that make the deductions, right? Based on the provisions of the law, the customers, upon making withholding tax deductions, should provide withholding tax receipts for their vendors that they make deductions from. All right. So those are my thoughts.
Also, you realize that from the 2024 regulation, individuals are not allowed to deduct withholding tax from the law. That means individuals are exempted. And actually, we don't have much cases of individual deduction, except in cases of maybe rent, where companies rent from an individual who withheld from them and remit to us or the FIRS. But in this case, the law has said individuals are not to deduct withholding taxes now. So I don't see how that would apply in this case.
In fact, Mr. Oduwole, you just raised a very interesting issue, and I was hoping we could also give some context to that, because now the law has indicated that individuals are not empowered or required to deduct withholding tax. So I'm just thinking, for a Lagos state where some of your taxpayers are individuals, what happens in situations where there's transactions between individual to individual, let's say for instance, payment of rent, in the states? How would that be resolved? Is the expectation that the owner of the property would now report the gross amount of the rent when they are filing their tax returns, or what's the LIRS looking at in that regard?
For before now, like I said earlier, for withholding taxes, even under the 1997 regulation, you have to deduct based on the operation of payee. That means there is a company involved when there's a company involved in the transaction. That means there's a legal entity, not an individual. Because if you are operating payee, that means you are a company, you have staff, you have everything. In this case, it's I don't see any difference. Like I said, it's the only difference we are having now is for companies for withholding tax on rent. On the rent issue, individuals, few individuals, we don't, because we've checked our record when the law came out, and so that there's only few individuals that actually remit withholding taxes on rent. No, most people don't do that. It's only companies, and we still deal with companies that remit on behalf of individuals. And it's not, the law has not said the companies cannot remit on behalf of individuals. So in this case, we are still going to be collecting as we are collecting. And for individuals, the law says individuals cannot pay, but in cases where should not deduct withholding taxes. But in cases that we see these transactions in the books of companies that they have paid to an individual and the individual has not remitted, we are like we said, once you are paying to them, collect. It's not even an issue of collecting of receipts now. You have not paid. We follow up with the individual to file appropriately as it is in this case. So we don't really have much, like I said, much individuals pay withholding tax on rent. So, thank you.
Thank you. Unubi, over to you, please.
All right, thank you very much. So we have a question here that says, please, do I need the company's management approval before I start applying the new tax rate? I'll direct this question to Aminat.
When you say the company's approval, you mean the management of a particular company?
Yes, that's correct.
Okay. So typically, matters that relate to regulations and law, they are sacrosanct, right? And every company needs to comply with them. So the expectation is that the management of the company are also aware of the tax obligations of the company, and they would give the necessary approval for such compliance. And I mean, I want to believe that companies also have their tax consultants who guide them on some of the things that need to be done whenever a new regulation comes to force, so that they know that they need to comply as required. Thank you.
All right. Thank you very much. Another question here that I think will be relevant for Mrs. Shodipo. Somebody wants to know, what are the remedies available for a taxpayer in a situation where the counterparty deducts and refuses to issue receipts, especially knowing that the tax regulator may come after his company? I think a lot of people will be interested to hear. Mrs. Shodipo.
Thank you very much. Remedies. You have to iron this out. Somebody taking your money, and it's not evidencing it. What you have, we can't fight for you, because we're not there when you are transacting the business, between or among yourselves. Please make sure you stay there. Maybe if you need to pacify him, to make a moral situation, sir, I need this thing. My money you have deducted, give me. Beg the person, please. Don't leave the company premises without taking your receipt, because we cannot go and actually do a fighting over there. It's when you present evidence of receipt that we can actually take any action. So you just have to iron out among or between yourself. Thank you very much.
Oh, thank you. And I think that's spot on, right? The important thing is to, take responsibility.
Please, let me add. If you are lucky, the person has remitted the money. When you come, you will see it in your portal. It's possible he might not give you receipt. If you say he will remit, then there might not be any issue. But you, as you see, as you open your system, you will see. But if you leave the place without getting the physical receipt and you open your portal, the money is not there. That means the money is gone. You can't claim anything. That's what I can say on that. Thank you.
All right, sure thing. I completely agree with you. Okay, Aminat, this question is for you. Someone has asked, you know, see, small companies are exempted from deducting withholding tax on their supply invoices if all conditions are met. Are payments due to them, that means the small companies, also exempt from withholding tax deduction in accordance to the new regulation?
Okay, absolutely. I mean, we all need to remember that withholding tax is an advance payment of income tax. So a company that is not liable to withholding tax is definitely, that is not liable to income tax is definitely not liable to withholding tax. So yes, a company that qualifies as a small company as defined by the SITA as amended by the Finance Act would definitely, the income earned by that company would not be subject to withholding tax, and is also there in the withholding tax regulation, because you also find that there's now another level that even requires such companies not to deduct from their suppliers, provided that the transaction is below 2 million naira and that the supplier has a TIN, that's a tax identification number.
All right, thank you very much. We have so many questions, and I can see a lot of people are really interested and they're just throwing in a lot of questions. So someone has asked, I would like to ask, how do we remit withholding tax for a vendor without TIN? All right, I'll direct this to Mrs. Shodigbo. And of course, Ms. Oduwole, if you have comments, if you can make those comments very briefly, since we have a lot of questions. Ms. Shodigbo, please, if you can. If we can have
Can
your
you come by
comments.
it, person?
Okay, so someone wants to know how they will remit withholding tax for a vendor without TIN, right? There's also
Okay.
another.
That's nice.
Yes.
Yes.
Sure.
Okay,
Go
you're
ahead,
still
please.
reading?
Go ahead. Go ahead.
Yeah, it's stated in the regulation. The person does not have TIN, you have the NIN, you collect either of the two. But in the whatever, you can just ask the person to come to the relevant tax office to quickly register the generated TIN for the person. So that's is a low hanging fruit. You come to FRS or either that you want to remit and the person will generate for you so that you can use to remit. But the law stipulates that take TIN or NIN where the person does not have. So that's the thing. So come forward to us. We'll give you the TIN that make you to pay. Thank you very much.
All right. Thank you very much.
If I may, I want to believe
Sure.
perhaps this question is coming on the back of the requirement to apply the double tax rates when there is no TIN. Because, I mean, Mrs. Shodigbo, I'm just thinking to myself, if, the law requires me to, apply double rates and then I come to you and I get 18, haven't I solved the problem? I'm just, thinking about it. Like, the problem seems to be solved. I know that the essence of that is to ensure that there are more people in the tax bracket, right? Because everybody would rather prefer to register for the tax as against being exposed to double the tax rates. I just thought maybe you could provide some clarification. So when the person comes to you and the TIN is eventually issued, as the issue being resolved, i.e. I can now go ahead and deduct at, the nominal rate, or do I still need to apply the double withholding tax rate?
Double tax rate? No. There's not. It's only when the person does not have any of the two. You cannot make up, the TIN or NIN. But you know how we normally do for the foreign individual at that time. You come to register, then we'll give you a generated, TIN for. It's very easy. But this time, as in the taxpayer they should not be lazy in working to any tax office to explain the predicament, at least to save the situation of charging double on the person to work in. And I'm sure LRS will also welcome to generate TIN for the, and it's not you have TIN or NIN, but of course they might be running away for the documentation process, but we are ready in FRS to take you. So of course we need to validate some items we are bringing that we can actually trace, because when you have TIN, you know, it comes with obligations, and you know, that's why some people they will just stay back. They don't want to come to TaskNet, and that's the thing, you have to pay double. But if you actually want to remit, walk into any tax office to generate. I'm not going to testify. I would normally do for the offshore, all those non-resident that time. You generate CI for you to remit this, because you cannot generate, you cannot remit any money without attaching it to a particular taxpayer. I'm sure even LRS, they do that. They give you your own code that you want to. Otherwise, it won't be credited to you. That's the other thing. It's not difficult to walk in and we'll give you. Thank you very much.
All right. Thank you very much, Mrs. Shodipo. We had asked Ms. Oduole a question, you know, so maybe we should just go back to that question. All right. Ms. Oduole, so, you know, you had mentioned the last time about individuals not being part of the persons required to deduct withholding taxes, right? What are your thoughts on how this would impact eligible payments that these individuals would make?
Like I said, honestly, from when this regulation came out, we've done our research, and because the earlier regulation had said withholding tax should be deducted from those that operate payee. So for that, the operation of payee was the hinge on which withholding tax collection was deduction was done under the 1997 regulation. So individuals are not how would I put it now, are not even in the bracket as it is today, then, and as it is now. So there is no impact on our revenue, because most people that operate withholding tax then are companies, and today they are still companies under the new laws, the new law. So it doesn't have any impact. Individuals, like the only where we see individuals remitting is on rent, like I said, maybe rent. And we've done our research, we've done our findings. It's only minimal in our in the past, we've done a research for the past 5 years to see how it affects us. But it's minimal. And then for those ones, once we see it in the company that you have deducted withholding tax from this company, we come after you if you have not filed your income, or if you have filed and you have not declared the income that you have collected for that rent, which is supposed to be subject to tax. So that's how it's going to work from going forward.
Okay. Thank you very much. I think that's interesting. Aminat, I just want to throw two very quick questions at you from the chat box. The first is, someone wants to know, on WHT receipts, how do we generate the receipts after deducting from source? Is there a template that can guide the receipt issuance? And that's the first question.
So,
yeah.
Okay, yeah. So the gazetted withholding tax regulation gives a sample or a template of the receipt to be issued. I believe it's available on the FRS's website, but if you need any additional help, you can reach out to us after the call and we'll, send the template to you. But there's a template that provides the information that must be included on the receipt for it to be valid. And I think Mrs. Shodipo alluded to that when she was speaking earlier, when she spoke about the fact that it's important that when the receipts are being issued, taxpayers should ensure that they follow the format that has been provided in the regulation regulation so that it's also easy to give value to those receipts.
Okay, all right. We've gotten that. The next question is with respect to the non-inclusion of individuals as persons required to deduct. Someone has asked, the exemption with regards to individual, does this relate to individual persons or individual businesses, that is sole proprietorships and partnerships?
Okay. So the exemption is clear, because if you look at the withholding tax regulation, it has, maybe the reason why the person is asking this question is because sole proprietorships and partnership have been described as unincorporated companies. So they are still covered and they're expected to, deduct. The only exemption is for individual persons, but not businesses. But of course, if peradventure any of those sole proprietorship or partnership qualifies as a small business, as it were, then perhaps, they would also be exempted.
All right.
I don't know if
Thank you
Oluwole has anything to add to that.
Yes, another issue on the small businesses, which Ms. Jegede has raised, is the issue of small businesses not having turnover of 25 million. We should also be aware that at the point of audit, we would not be asking only for the bank statement of the company, because from our investigation and from our findings, most small businesses get money for the business in personal accounts. So we should ensure that we have our books in place and ensure that every of our transactions are documented. Because if we ask for your bank statement and we are seeing narrations of collecting money that it's supposed to go into your business account in your personal account, because I know those are where taxpayers will want to be hiding and saying that our personal account does not have, our business account does not generate a turnover of 25 million. But the fact is that we are not going to be looking at the company's account alone. We are going to be looking at the personal account of the sole proprietors, because we have noticed and we know that most of them get company money, business money in their personal account. I just want to make that clear. Thank you.
All right. Okay, thank you very much. I think, you had mentioned small companies. All right. I think a lot of people in the audience will want to know that, for transactions with small companies that are exempt from income tax and withholding tax deduction, what documentary evidence should taxpayers maintain to validate the transactions with the tax authorities? So I'm going to direct this question to Mrs. Shodipo, and of course, Ms. Oduwole, if you have any comments. So what documentary evidence should taxpayers maintain to validate transactions with small companies to the tax authorities? Mrs. Shodipo, if you can please, do you want me to take the question again?
Well, let me talk.
Okay.
Incidentally, no, we don't deal with the video of small companies. I deal with large people. But then, if you
Mrs. Shodipo is a big
want to
woman. You are a
claim,
big girl.
if you claim you actually transacted with small companies, you need to, we just bring documents. If I want to ask you, let me get the account or the name of the small company. Sincerely, I'm not going to tell you we are not auditing that company. It's me you are auditing. Because ordinarily, if you're supposed to pay withholding tax and you are telling me that you transacted with small companies, and otherwise it's not deduct, I'm not where we are going now. If you do that one, you have to bring the account of the small companies. I need to confirm that it's actually small companies. Where we need be, we interface the LRS. Can you confirm this one is a small company? And for us in the FRS, nobody has no hiding place. We have arrangement with the banks to even get a bank statement. If you are bringing something lower, we can actually see it. Even where you keep your money in the offshore account, you have the AIO, exchange of information that we can get what you have taken to Swiss accounts in overseas to see. So, but we need to just, at least, you give us the name of the small companies you want to confirm, is it in TaxNet, and confirm maybe transactions through the banks. We have link with the banks to give us to confirm that the company you claimed are actually, small companies. In the past, it has come. I mean, I can bear me witness. They will tell me to deal with individual companies, it's not corporate. But I will start scrolling. You know that this company will just remove the word limited. And I said the utility should go to LRS, but we know some name will just pop. This one, I'm there is a limited. Why you, because you remove the word limited, now tell me that individual is for LRS, no? Taxpayers are different, the funny way of presenting information, but we have to just to do a second level vouching to confirm. Don't just take it. It's like somebody say, I'm in a free trade zone, all my revenue are free trade. Go and bring the evidence of the company is free trade zone. We go to confirm that, yes, it's exempted, it's in free trade zone. I mean, no one knows how we angle that one out. So let me go into that. Thank you. So we confirm when you say you deal with small companies and all your transactions are with small companies, so they are not entitled to pay withholding. We'll ask for documentary evidence. And taxpayers should help us in that regard. Even if you are sure that you are doing, if you ask for documents, please give us, so that the intention is not to kill the companies, to delay the golden eggs. We just want to confirm. We won't take more than what is. And this withholding tax we are saying is an advance payment. I don't know, I said it. Is not a special tax on its own. Is if the person is not liable to CIT, we cannot take withholding tax, except it's the offshore that is the ones for the final payment of tax. Thank you very much.
All right.
Okay. Unubi,
Thank
just
you.
a reaction from me. Mrs. Shodipo, I hear you when you say that we should bring documentary evidence, but I was just thinking that the small companies are somewhat exempted from preparation of audited accounts, right? So chances are they may not have proper accounts in that sense, because the law does not really require them to prepare one. So in that instance, will the bank accounts be sufficient? Because a lot of taxpayers really want to know, how do I justify or prove to the tax authority that this company I've been dealing with is a small company? And I'm just thinking that practically, chances are even the small company might not be willing to provide its bank statements to its customers or to its suppliers in a bid to justify that it is a small company. So how do we manage all of that? Because I mean, when I hear now, it's what I hear you say is that it's either a financial statement or a bank account, but we know that there might be challenges in that regard. Is there any other thing that we can use to identify these small companies? Thank you.
Yeah, thank you very much. Like I mentioned to you, if care is not taken, most of the taxpayers that are supposed to pay withholding, they will tell you they are transacting with small companies. So how do we work around this? If you give us the bank statement, but you give us the list of the companies, the names of the small companies, on our own end, you can also confirm their bank, the bankers. So, but if you are dealing with them, you know that it's a risky that FRA will come after you. You're supposed to have done all the needful at that point of consolidating your records. The FRS will ask me if I'm saying out of this transaction, maybe 10 million, 8 million, they'll say 8 million is for small companies. So you know that we are going to ask. So it's going to reduce friction. If you have guessed, all documents are ready, so that when we ask, the process of a button, you just print out. But we'll still confirm, are they really small companies? But of course, the small companies in quotes, portfolio companies, they might be big and tell you they are small. How do we do second level check? So you need to help us. We have to work together. We are partners, partners in progress to build this country. Not that we want to prevent, cover somebody and whatever. We will confirm from our own end. We can get in touch with the bankers to, we have signed oath of confidentiality. We won't disclose your information to other person, just to confirm that you have done the needful. It's true you are small. And I don't want to be small, I want to be big, so that people Don't stay in the small category and move up. So that's the other thing. You give us something. Bank statement will suffice if they are not. But however, even somebody that is doing account, even my mother that cannot write, they can, where they are putting the figures down, they have where they are scribble how much I sold, how much I have, to know the profit. If just to know that I'm actually small. So that's what I can say for now. Thank you.
All right, thank you very much. An interesting conversation so far. We have just about 5 minutes before we close the session. So I just want to see if we can just take 2 questions very quickly. The first question before we close, direct to Aminat. I think it's something a lot of people would want to hear. Aminat, what type of transactions will qualify as across-the-counter transaction based on the definitions in the new withholding tax regulation?
Okay, thank you very much. And I'm smiling because I'm sure Ms. Shodipo will say we have come again, and that right now, at least, this particular issue has finally been put to rest. Because, prior to now, there's been some sort of, will I say, relaxed and different interpretations as to what will qualify as over-the-counter transaction or even transactions in the ordinary course of business. But based on the regulation, what we have now is a very clear description or definition that says that transactions that qualify as across the counter, they're just transactions without any established contractual relationship or any form of, will I say, arrangement between the two parties. And it must be transactions that are sorted with cash on the spot. The example that comes to mind is perhaps if a company, prior to now, we used to have instances where companies buy goods from an hypermarket, for instance, let's say your Pack and Shop or your ShopRite. Ordinary, we would tell the FIRS that this is an over-the-counter transaction, but it is also not lost on us that there are some companies that have arrangements with these hypermarkets wherein all their supplies are based on the PO. So what's on a going forward basis, what will qualify as over-the-counter transaction are transactions that are done on the spot and you pay immediately. When you have instances where an invoice is issued and then you are paying in 30 days or in 10 days, or there's any form of credit facility, then such transactions would be liable to withholding tax based on the way the withholding tax regulation has defined it. Thank you.
All right, thank you. Thank you very much. And the last question before we close, I'll direct these questions to Mrs. Shodipo and Ms. Oduole. And I think it's the best question to end with, right? Because what a lot of businesses always anticipate, and the tax authorities as well, tax audits, right? So, please tell us, in preparing for future tax audits that would arise from implementation of this withholding tax regulation that was released in 2024, what are the key issues taxpayers should bear in mind? And Aminat, if you have comments as well, please let's have those comments.
Do you want me to start?
Yes, please, Aminat, you can start.
Okay, thank you. I think what is clear, and if we sum up everything we've been discussing from the beginning of this chart, is the fact that it is important for taxpayers to be aware of the contents of the withholding tax regulations. There's been a lot of changes, there's been a lot of clarifications, and there's also some requirements from each taxpayer. I was reading through some of the questions that has been raised over the period of the chat, and I can see that a lot of people are very much interested in what happens when a credit note or, a credit receipt is issued. How do they get value for it? How do they ensure that it's validated and all of that? I think personally, from where I see it, the first thing is even to ensure that you understand the provisions of the regulation. The provision of the regulation has prescribed a format or a template in which those receipts must be issued. So as a taxpayer who gets some withholding tax deducted from my payment, it is important that when that receipt is issued to me, I double check that it's, it meets the prescribed format, so that when I present it to the FIRS or LIRS, I know that that first level check has been done, and that would not lead to a rejection of the receipts. That's number one. Number two is also documentation, like we have spoken about. There are a number of transactions that are exempt from the withholding tax deduction, and each taxpayer needs to be able to demonstrate to the tax authority that the reason why I have not deducted from this particular transaction is because it qualifies as ABC because of this, as defined in the regulation. The other bit I would like to say is for all taxpayers to also be aware of the changes in the rates. I mean, I had to spotlight the one on directors because, I felt it was one of the rates that changed significantly. There's also some distinction between a non-resident recipient and a resident recipient. So those distinctions also need to be clear to know that when I'm dealing with a non-resident party, the rates ranges from 5 to 10% or 15% if it's a director, and if I'm dealing with a resident, it ranges from 2. So know the different types of transactions and know the particular rates that should be applied for each of those transactions to ensure that in the event of an audit, there's no instances of over or under deduction. Let me pause there so that I allow Mrs. Shodipo and Mr. Oduwole to speak. Thank you.
Yeah, you have said it all. Like we said, we have to get acquainted with the regulations to be able to know how to even apply. So at least federal government are listening to the yarn of people, especially the liquidity they are, that's why they have reduced the rates where need be. So, and that's the other thing. So everybody that want to adopt it has to know what am I even supposed to take on which transaction. So we need to know it, and vis-a-vis to know how it's going to affect. And where you are bringing your returns and you think majority of the items out, let us know that all these items. So was Unobi said, what should we the taxpayer expect when they want to do audit? Ask questions. You to do diligence before we come forward. Pack all those things ready. That's okay. I know you asked for this. This is the transaction that I did with the individual, and this is the one I did with the non-resident. This is what I did with whatever. So if everything is ready, it's going to reduce friction. And I tell you, it's going to improve collection to government. Is for those that are not working with big companies, where people will say, when the audit comes, I'll pay my tax. They'll start looking for a way around to reduce the figure by being crook and means. But this one is very straightforward. Nobody is cheating anybody, and it is guaranteed that if your money is deducted, they're looking for money, looking for engaging another person to look for credit for you. It's not there. It's seamless. If all of us, it needs all of us to cooperate. All of us needs to embrace this thing. All of us need to work with it. It's not only the tax officials alone. It's not the tax office, the taxpayers. Please work with your consultants so that you take to advise they give to you on the adoption of this thing. And together, it shall be easy for all of us. Thank you very much for organizing this program.
Thank you very much. Thank you very much. Ms. Oduwole, do you have comments?
Thank you very much. Like other moderators have said everything, you need to familiarize yourself with the new law and ensure that you are not running foul of the law, which is very important, because in most cases, what we have seen is that people looking for lacunas and eventually run into problems. So we should ensure that we all familiarize ourselves with the law and keep documents as much as possible. Documentation is important. Documentation is important in this case. If you don't, because if you are coming forward to LIRS to say, I have this, and you are just coming with nothing, just by the word of mouth, you are not going to be honoring it. Let the receipt the law says we should collect be appropriate, and follow up with those deducting. Ensure that it is actually deducted and remitted. So we just let everybody, it seems to be easy for us, like Mrs. Shodipo says, if we comply with the provisions of the law, and don't let's start looking for lacunas that will eventually put us into a problem. So thank you very much.
All right. Thank you. Thank you. Thank you very much. I think it was a very insightful session, a conversation, you know, I think can always be referred to, right? I think it provides, you know, I mean, the reality of, you know, the practical aspects of the withholding tax regulation. So I want to say thank you very much to our panelists, Aminat Jegede, for, you know, all your insights, and a special thank you to Mrs. Shodikwa, Miss Oduoli, right, who took out time from their very busy schedule to, you know, have this conversation that, you know, is very, very important and is very valuable to our audience, you know. So finally, I'd like to thank the audience as well. Thank you for tuning in. We have looked through a lot of your questions, you know, in the chat box. A lot of the questions that we haven't called out, right? It's because we have gone through, or we've had those conversations in the course of this session. All right. So if you can take some time and listen to the conversations, I'm sure you have your questions answered. If you have additional questions, we're going to post an email in the chat box, and then you can send those questions, and we will try as much as possible to get back to each and every one of you. So thank you very much for joining, and we look forward to having you in our next tax chat. Have a great day, everybody. Goodbye.
Thank you.
Thank you. Bye.
Thank you very much. Have a wonderful day. Bye.
Thank you, Mr.
All right.
Shodikwa and Mr. Duale. Thank you so much. Much appreciated.
Thank you.
Thank you.
All right. Bye.
All right. Yeah.
There is a popular African proverb that wisely states, "Until the lions have their own historians, the history of the hunt will always glorify the hunter." And there is no better way to demonstrate this than using the following. These are snips from newspapers and other broadcast media around one of the foremost communications companies in Nigeria, and they tell a negative story. In the next screen, you can see a very positive narrative from the same company. It is noteworthy that these screens are only a month apart, with some of the negative reports in March 2022 and the positive reports in April 2022. What changed in just 1 month? Another intriguing story comes from a widely circulated social media image. It led to various interpretations, turning everyone into a tax expert. People were puzzled by how one entity managed to pay more taxes in 1 year than all the banks in Nigeria combined. The real question is whether this is the true picture. How does it impact the public's perception of these entities? What story is conveyed when such information becomes public? Equally important is understanding who is crafting the story and communicating these narratives. This is why we always say that at the end of the matter is that the story is told right all the time. It underscores the need for taking responsibility in communicating your tax affairs and matters, ensuring that your story is always communicated accurately. Tax impact and transparency reporting provides the avenue through which you take personal responsibility for how your tax affairs are communicated to the public and that your story is told right every time.